Ratan Tata, a true titan of our times, fondly remembered by one and all. Now, in what's brewing today, home furnishing startup Furnishka has raised 27 crore rupees in a pre-Series A funding round led by India Quotient. This capital is going to be utilized to advance product design and development, strengthen manufacturing and supply chain capabilities, and expand to new locations. Furnishka will also leverage this funding to expand product categories, open 6 large format stores, and create educational content for customers. Joining me now is Ganesh Pawar, the founder of Furnishka, for more on this funding and the growth ahead. Congratulations and thank you for being with us here on CNBC-TV18. Start by telling us what proportion of this 27 crores that you raised will be directed towards expanding the product categories versus, scaling your retail footprint, and how much do you expect, will your revenue growth be impacted because of these measures?
So I can say half and half. Half of it would go for expanding our footprint, and rest of it would be primarily spent on optimizing our supply chain, developing new products. In terms of revenue, I don't have revenue target as such, but by next year end, we'd like to see 50-odd thousand happy customers in Bangalore and NCR, where we are expanding next.
All right, Ganesh, you have about 4 physical stores in Bangalore and a growing presence online. How are you leveraging this omni-channel model to capture a larger share of the market? And, what percentage of the sales do you expect to generate from online versus the offline channels where you're looking to expand?
So we are primarily in a premium furniture, and we strongly believe majority of the sales in premium furniture would happen offline. But even then, your online presence would be very important, because in the world of 2024, the time we are living in, the window shopping, I strongly believe, would happen digitally, not in physical stores, but on your mobile phone or laptop screen. So the first interaction of customer with the brand would happen on your digital channel. So a seamless digital experience would be very crucial, but the transaction, the final sale would happen in offline stores.
And Ganesh, could you give us a sense of where you're looking to open these stores? Is the focus very much on metros and tier 1 cities? You spoke about Delhi and Bangalore. Are there any other areas, and how many stores are you looking to open?
So we are planning to open 6 more stores, predominantly in Bangalore, and we are partnering with one more retail chain in NCR, and with them we'd be opening 2 more stores there. But primarily Bangalore and NCR as of now, and after that we'll like to expand in the tier 2, tier 3 cities around these 2 major clusters, that is NCR and Bangalore, say Mysore and smaller cities around Bangalore.
I see. I was reading that Furnishka's pricing model offers premium products at about 30 to 40% lower than competitors. So Ganesh, if you could walk us through the unit economics of this approach, and how soon do you project achieving profitability as you scale with the kind of model that you have?
So, depending on the products, we would be priced at 20 to 40% lower. This was primarily I say the value retail as such is a supply chain problem. I'm a supply chain person. When we started this business, I realized by optimizing the supply chain, we can definitely save 30-odd% of the cost on top. When you are a price leader, your marketing costs are lower, and your per square feet throughput could be as high as 2x, 3x your nearest competitor. Based on, if you add all these things up, you could practically be at a price point which is 25-30% lower on an average, and still make more money. This is proven worldwide. Costco has done that. Leo is doing that right now. So unit economics wise, of course, right now we are burning money. We are in growth stage. There is a lot of investment which is going in new product development. We are building large capacities which are underutilized at the moment, but I really don't see a reason Bangalore shouldn't be a profitable market for us in next 12 to 18 months.
All right. You've served about 10,000 customers in the year since you started operations in 2023. What are your key customer acquisition channels and how are you leveraging data to drive repeat purchases and improve the customer lifetime value?
Okay. So this category, as right now we are in loose furniture where repeat is not very high. I mean, you buy sofa once in 5, 6, 7 years maybe, but this is a very high referral category, and we're lucky. Large chunk, almost 30-35% of our customers are referrals at the moment. We would add categories like in home furnishing decor, which have very high repeat, but those categories would be launched in 3 to 4 months. And our strategy is simple. I mean, the hardest category to get right in this space is furniture, loose furniture. If someone like you is happy buying a sofa, premium sofa from us, I mean, definitely for you selling bed sheets and other things should be much easier. But those product lines will launch probably 4 to 6 months down the line. Right now, our focus is on loose furniture.
All right. You're also looking to expand product categories, premium living room, dining, bedroom collections, and so on. What are the gaps in the current market you're addressing with these categories, and how will you really differentiate your offerings from competitors, given that you're just starting out in this space?
Okay. So I believe, although, so the primary gaps, at least what we have, if you look at this market structure, right, majority of this market is unorganized. And unorganized world offers two things primarily: price, very competitive price, and personalization. So we started this business when we started Furnishka. The question we asked ourselves is, can we offer the personalization at the price very close to the price which offline world is offering? And that's going to be our primary differentiator.
All right, Ganesh, we're going to have to leave it at that. Thank you very much for your time here on CNBC TV 18. Thank you.
Thank you.